Hello and welcome back to Principles of Accounting 1. I am still your host, Dr. B. It's a pleasure and an honor to have you with us. I sincerely appreciate all of you taking the time out of your day to join us as we talk about accounting information systems. We made it all the way to week 7 here at UDC's spring 2023 semester. We're almost halfway done with the course. So this is a very exciting time for our course. And I want to call your attention briefly to the classroom and kind of show you where we are. So we're currently in Module 2, as you know, in week 7. We're about to talk about accounting information systems, which is Chapter 7. Next week, very busy week. Many of you will be taking midterm exams in your other courses, and you'll be doing the same for here as well. But next week's a little bit busier than we like it to be because we also have Chapter 8 to talk about. The good news is Chapter 8 is relatively short and very straightforward. And then you'll have the midterm exam also due next week. I know, sorry. I apologize in advance. I know it's a lot to ask of you. But we have to do it before spring break, which is the following week, right? Week 9, spring break. So I wanted to just call your attention to where we are in the classroom. I know that you're all working very hard, and I sincerely appreciate that. And I know that you have all been great about getting your work in on time. And I, again, sincerely appreciate that, and I'm glad that you're using our class time on Thursdays for that. I just wanted to bring this to your attention that, yes, the midterm is coming up next week. The midterm exam covers chapters 1 through 8. It's about 20 questions, if memory serves me right. The good news here is that it's open book, open note, open resource. So what that means is you can use your notes that you've took, your PowerPoint presentations, rewatch some of the videos, whatever, right? It's not timed. I don't believe in timers because that gives me anxiety. And so no timer, nothing like that. You can open and close it and save it as many times as you like. Keep coming back to it. You don't have to do it all in one sitting. Thank you, Jermaine. Yeah, I try to make life a little easier for all of you. That's my goal, is to take out the stress, right? You have enough stress as it is with your daily lives and your work, and a lot of you are in that the program, right? So I know it's overwhelming sometimes. So that's why I try to make the midterm exam as easy as possible for all of you, as digestible, and take out the stress. Because I care a lot about all of you, and I don't want you to feel stressed out, especially about an exam. So that's my promise to you. We'll talk more about the midterm next week, but I just wanted to call it to your attention so that way you're aware that it's coming up. And don't get stressed out about it. It's not a big deal. I just wanted to make sure that you're aware of where we are in the classroom. Okay. So let's talk about
Professor,
yeah,
Professor,
please.
I do have a question. So,
Excellent.
but if we're comfortable with taking it, we can take the midterm before.
You sure
Like
can.
you said at one point in time, we could just take everything. If we're whatever we're comfortable with, we can just go straight on through. And
You
that
sure
goes
can.
all the way down to the final two if we feel like it's
Correct.
something we can actually do. Try it at least.
Yeah, absolutely. Yeah. Everything's open in this course. So what that means is, if you like to work ahead, you're more than welcome to. Okay, you can take the midterm now if you really wanted to. I would caution you on doing it, but you could if you're comfortable as of today. With the midterm and the final, it's just one attempt. So that's why I want to throw that caution out to the wind. So just think about that before you attempt it. But yes, you can take the midterm exam today or whenever you're comfortable. You can work ahead. You could do the Chapter 8 discussion board. You could even do pretty much everything through the final exam if you really wanted to. But again, I just caution you about the midterm and the final, just because you only have one attempt. You can do it in multiple sittings. Just click save and close, save and close. But once you click submit, that's it. It's done. So that's my only cautionary tale for the midterm and the final. Yeah, absolutely, Maxine. You're more than welcome. You definitely work ahead if you like. Okay, let's go ahead and talk about this concept called accounting information systems. And I'm going to show you some real life stuff because, as I promised you before, I want to try to make everything relatable. So, Naya, please.
Hi. Just to be sure, so I just to make sure I don't misheard anything. Just to be positive, you said our test is next Thursday, correct?
Next week, yeah, as long as it's done by next Sunday. Yep.
Okay, and we still have a homework due that's this Thursday, correct?
Correct. Yep. You have your Chapter 7 homework, which is due this Thursday. Well, take your time on Thursday to do it. It's due by Sunday.
So do we have a homework for next week?
So next week we'll have class as we normally do on Tuesday. We'll do Chapter 8, and there's going to be a Chapter 8 discussion board that'll also be due next week along with the midterm exam. So there's a lot going on next week.
All right.
Yeah.
Thank you.
You're very welcome. When talking about accounting information systems, I want you to think about how we enter information into a computer system. And that's really what an accounting information system is. It's a way of tracking our sales and our expenses and putting in the transactions into this software that helps us to create the income statement, balance sheet, statement of cash flows, and other reports that help management. So that's what an accounting information system is in a general sense. So we'll talk about the concepts of accounting information systems, how to do the journal entries, etc. We'll talk about how we use transactions to post for sales and purchases and track expenses, etc. And we'll also do one of your favorite ratios toward the end. Let's talk about accounting information systems. As I mentioned before, it's really a way that we track and collect all the information in one place. Typically, we use software for this purpose, especially in today's modern age. Gone are the days of the paper and the pen, right, to track our revenue and expenses. We use software like QuickBooks, Oracle, Sage 50, FreshBooks, you name it. There's so many different softwares now that help us with our accounting. The same could be said with our taxes, right? As you know, tax day is quickly approaching on April 18th. I just filed my taxes, and I personally use TurboTax to do my taxes, but there's a lot of other softwares out there too, right? There's H&R Block, there's TurboTax, there's the list goes on and on. There's a lot of different softwares. Accounting information systems works the same way as those tax softwares do. It collects the information that you put into it. It processes that data, and it helps to organize the transactions and economic events and puts them into a meaningful report or a series of reports, like the income statement, balance sheet, statement of cash flows. But of course, if you're using software for your taxes like a TurboTax, what that software is doing is it's taking all the W2 information that you're putting into it and anything else like a 1099 or a 1098 or any other tax form. You enter that information into your TurboTax software, because it walks through the prompts, and it puts it into a report that you can review. It's your tax filing. And it's kind of cool, right? It's a nice way to see all of your information in one place. So accounting information systems works the same way. It tracks information that is relevant, compatible, flexible, and it has a cost benefit to using a system, an accounting information system. So how does it work? We take source documents, which include things like a sales receipt, an invoice, a packing slip, a purchase order. The list goes on and on, right? These are we call these source documents. The source documents represents a transaction, right? It represents a meaning, a transaction. That's what a source document is. We take the information from those documents and we put them into our accounting information system using our keyboard. We journalize the transaction, if you will, using our keyboard. And we put it into our QuickBooks, which is our information processor. And the data on our information processor that we put into QuickBooks or to Oracle or Sage 50, whatever you're using. And it's saved in the cloud. Information storage area, saved in the cloud. Cloud storage simply means that the data is not saved on a computer. It's saved on a virtual platform that you can access from anywhere. That's what cloud storage is. An example of cloud storage is your email. You can open up your email from anywhere. It doesn't have to be at one computer. You can open it up on your phone, on your tablet, on your home computer, your work computer, wherever, right? All your emails are stored on a cloud. Cloud storage, we call it. All it simply means is that it's stored virtually and you can access it from anywhere. And the output device is the screen that you're viewing it on. Again, it could be your home computer, work computer, laptop, tablet, cell phone, projector, whatever, to view the information. Call those output devices. In very simple terms, it's a computer. It's software on a computer. That's it. It's very easy. This is probably a good place to pause, and I want to show you a live system. So this is QuickBooks. This is the accountant version of QuickBooks. Because I'm an accountant, I have clients, and I take care of their books. And as an accountant, I have access to all of their sales data. So I can see my transactions for my company through, or I can look at my clients' information, and I can look at things like banking, their sales information, cash flow, expenses, payroll, time reporting, budgets. I can generate all kinds of reports. I can look at tax data, vehicle mileage for my clients that use like a work truck. It's impressive software. And what I do is I take the transactions from my clients' bank statements, and I enter them in. I journalize them to represent the transactions that have taken place. And that's information is what helps to generate the income statement, balance sheet, statement of cash flows. It's all the things we've been learning about over the past 6 weeks. You know, when we've been learning about the income statement, balance sheet, statement of cash flows, the transactions that we've created, when we enter them into something like QuickBooks or Sage or Oracle or whatever, it helps to generate those statements for us. It takes the manual process out of the equation. A lot of this stuff is automated now. And so I wanted to kind of show you this and what this looks like because, you know, some of you might already know because you might be using QuickBooks, but it's really great software. So if you have a small business and you're still using Excel or whatever to track your stuff, I would recommend that you strongly look at an accounting software like QuickBooks to help you out. Any questions at all on software like this, or are you ever curious about it?
Yeah, Professor. So a while back, I had not this new version, but you know, you used to be able to download on your phone. It seems I've been able to peruse this software a little bit off and on. I don't have the versions that you can pay for, but I've been able to take a look at this, and I find striking similarities in between QuickBooks and Mint because they're both,
Yeah.
I think they're under the Intuit umbrella.
They are, yeah. They're both owned by the same company. That's right.
Yeah.
Yeah, so there's a lot of similarities between the two. What are the differences between the two? It depends. There are some features that you'll find on QuickBooks that won't be on Mint. Mint
Payroll.
is, sorry?
Payroll.
Yeah, that's
Payroll is not right.
so Mint has a payroll add-on, but it's not as strong as it is in QuickBooks.
Yeah.
Yeah, so there's a couple of nuances that you'll find. Yeah, that's good. Yeah, there's a lot of similarities between the softwares, and really it depends on the business's need. You know, you have to analyze your business and say, okay, so what do I need, or what does my client need? You know, you go walk through a needs assessment and say, okay, how many employees do you have? What are your annual sales like? What kind of products are you selling? Or what kind of services are you providing? Asking those key questions of your clients will help you to identify the right software that they might need to use. So there's tons of them out there. Do some exploring, do some internet searches for accounting software, and you'll see there's tons of them. There's a lot of free trials out there too. So feel free to go through a free trial. See if it's something that you can familiarize yourself with. You can see on this screen here, there's there's a lot of training available. You can become a certified user of QuickBooks, and having that kind of certification and putting that on your resume, it's kind of a cool thing. You know, it might even open a couple of doors. So just something to think about. I just really wanted to show you that because I thought that you might find some interest. So if we go back to our presentation, what you would see in an accounting information system like QuickBooks, you'll see a lot of ledgers and subsidiary ledgers. A ledger is quite simply a list of all of your transactions. It's a ledger. We call that a general ledger. The general ledger tracks all of your transactions. Very easy. Within a general ledger, we have what's called special journals and subsidiary ledgers. A special journal is an area for you to do adjusting entries or large general journal entries. We call it a special journal. In very simple terms, it means that I can quickly create a transaction using a special journal. I do those at the end of each month, make adjusting entries, or maybe very large general journal entries to reconcile my accounts at the end of each accounting period. Subsidiary ledgers are individual accounts. Think of your chart of accounts. The chart of accounts has all of the accounts listed out that a company would use. Examples would be cash, accounts receivable, property, plant, and equipment. Those are your assets. And then just underneath that, you have your liabilities and equities. Under liabilities, we have accounts payable, wages payable, taxes payable, notes payable, long term. And then underneath that, we have our equity accounts. And then directly underneath our equity accounts, we have our temporary accounts. That would include things like sales, cost of goods sold, all of your individual expense accounts, like utilities, rent, etc. All of those accounts are listed on what we call our chart of accounts. We talked about that a few weeks ago. Each of those accounts represents a subsidiary ledger. And in this example, we can see our subsidiary ledger accounts. We have sales, cash, purchases. These are our subsidiary ledgers. Think of it like we call it a T account. A T account has the name of the account on the top, and then it has all the debits and credits that affected that single account. Those are your subsidiary ledgers. Here's some very quick summary slide. Subsidiary ledgers are a listing of your individual accounts with common characteristics. We just talked about them. Accounts receivable, accounts payable, those are subsidiary ledgers. So is cash, and pretty much all of your individual accounts within the chart of accounts has a subsidiary ledger. I want you to think more specifically about accounts receivable and accounts payable. Accounts receivable, as you know, represents the cash that is owed to the business. I made sales to my customers on account. My customers told me they're going to pay me later. I created an account receivable for my customers. The accounts receivable total represents all of my individual customers that owe the business money. When you see accounts receivable on the balance sheet, it has a total next to it. And that represents the total amount that all of your customers owe you collectively. The balance of the account, right? Within accounts receivable, I have a lot of different customers. And each customer represents a subsidiary ledger of accounts receivable. So if you think about accounts receivable, you have a lot of different customers, each customer has a dollar amount that they owe you. If you add up all of those customers, we get the total amount of accounts receivable. Accounts receivable, again, is it's a general account that has total amount that all of your customers owe you collectively. Within accounts receivable, we have subsidiary accounts, and that is the individual customers and the amounts that they owe you. See? It worked the same way with accounts payable. Accounts payable represents all of the bills that the company has not yet paid. Accounts payable, right? I owe the money to someone else. It's accounts payable. So within accounts payable, I have my subsidiary accounts payable ledger, which shows all of the individual bills that I have not yet paid. I got the utility bill. I got my supplier's bill. I got multiple suppliers' bills, right? Get them all up together, total amounts of accounts payable on the balance sheet. Individually, they're called subsidiary ledgers. The word subsidiary, when you hear it, think individual. Subsidiary, individual. It's like the child. A subsidiary is a child to the parent. Yeah, way to think about it. So this kind of graphically shows exactly what I was talking about earlier. Within accounts receivable, I have multiple customers that owe the company money. Here we see, for example, I have 3 different customers that owe the company money. Collectively, they equal the total amount of accounts receivable. They have individual amounts in the subsidiaries. It shows me the amount that each individual customer owes me. It works the same way for something like accounts payable. I have individual bills that the company owes, like the electric bill, the supplier bills, etc. I haven't paid them yet. I add them all together. Collectively, it equals the total amount of accounts payable. Individually, it shows me the amount that I owe to each individual supplier. See? So general ledger shows the total amount. Subsidiary ledgers show the individual amounts. I use my QuickBooks to also post my sales. My sales is my revenue. My revenue, I track that using what we call a sales journal. It's quite simply a list of all of the individual sales that I've made. Okay. It doesn't matter if I made that account with cash or accounts receivable. It all goes on my sales journal. We can see through this example how the sales journal is related to the accounts receivable ledger. The accounts receivable ledger shows all of the individual customers that owe the company money. And we can see how that rolls up to the general sales journal. See? All interconnected. It's so important to make sure that we reconcile our balances. What I mean by that is we need to be able to prove the balances are correct. We call this proving the ledgers. It shows us a list of what all of our customers owe us in accounts receivable. It also shows us a list of all the bills that our company owes to our vendors. Accounts payable. What we do here is we're verifying the amounts that are owed or the amounts that we expect to receive. Think of it like a detailed individual customer list that shows their balances. And what I do is I verify the amount that is shown that I expect to receive from each individual customer, and I compare that to their invoices. If I see that their invoice has not yet been paid, meaning I haven't yet received payment for that bill that I sent my customer, then it should match the balance for that customer. Right? Call that proving the ledgers. And we can do the same thing, of course, with accounts payable. I also mentioned that we occasionally have to make what we call general journal entries. These general journal entries, I typically make those at the end of each month. It represents the other stuff that I need to record. For example, sales returns and allowances. Oh, there's that word again. Sales returns and allowances. Every time I hear it, it gives my heart a break, I think. Because it means the customers are bringing back the stuff. Oh my goodness. Nobody likes returns. But sales returns and allowances these types of transactions require a general journal entry. I have to manually enter this into my QuickBooks. Because it's something that really doesn't happen that often, and it's something that's not automatic. So I have to create what's called a general journal entry. And I typically do this at the end of each month. It depends on the business. Some businesses do it as it happens. In this example, it's as it happens. We see a date of May 17th. So here we have a customer that has a few returns. We debit sales returns and allowances, and we credit accounts receivable for that specific customer that's returning the inventory. You see how it says accounts receivable and then the customer's name. The customer's name represents the subsidiary account within accounts receivable. Okay. It's important that we have that information in there because we need to make sure that we're crediting the right customer. I don't want to give another customer credit on their bill and then charge the other amount to this current customer, right? This is an example of a general journal entry that I would make that affects a subsidiary account. In business, we also make sales in cash, not always on accounts receivable. I might have customers that would pay me in cash, and other customers that would pay me through accounts receivable, meaning they'll pay me later. And it's important that we maintain all of the transactions that involve cash, whether that be cash receipts from our customers through cash sales or collecting from their accounts receivable, or payments that we're making in cash. The cash receipts journal shows us all of the individual transactions that involve the cash account. Kim.
So with this, you know how there are those businesses that they don't take returns and they only take, basically you can only get store credit,
Yeah.
for that. So are those businesses I mean, I know that for me, I hate that sometimes, but they make sure that they keep their money with you, they keep your money.
Well, so here's how that works, Kim. Let's say I'm Macy's, and Kim bought some clothing from me, and Kim's going to come back and say, you know what, this stuff doesn't fit, or I don't like this color of this shirt that I bought from you. So Kim comes back to Macy's and tries to return it. So what happens here is, by Macy's, let's say Kim didn't bring her the receipt, or something, or the policy says that I can only give you store credit. So the way it works is, instead of giving cash back to Kim, I'm going to say, I'll give you store credit. What store credit represents is a liability for the company. If Kim doesn't use that store credit, I can basically write that off in the taxes at the end of the year as a business loss. But if Kim uses that store credit, then I reduce the liability by that amount. So in other words, it's still a part of the transactions that we would have to make, a general journal that we still have to make. It's just instead of us crediting accounts receivable, we would actually be crediting an account called store credit. I would have Kim's name on it. But either way, it becomes basically a liability to the company.
Thank you.
You're very welcome. That's a good point. Very good point. So when it comes to cash, we have customers that pay us with cash when they make the purchase originally, or they might have purchased through accounts receivable, and we're going to collect that cash from the customers later. Or the business is going to use cash to pay for our bills, day-to-day operating expenses, etc. And the cash receipts journal shows all of those individual transactions that uses cash, whether it's cash coming in or out of the business. And here we can see, and that's for the cash general journal. And here we can see the cash receipts journal, which represents all of the cash coming into the business through our sales, through our accounts receivable. Then on the right side, we see some cash going out for inventory, etc. But you can see how it's all interconnected. With your subsidiary is connected to your general ledger. Oh, I'm sorry. Footing, cross-footing, and posting. It's so funny that they call it that. Here's how it works. All this simply means is that we need to make sure that our debits equal our credits. That is a fundamental principle in accounting. We learned about this, I think, like the first day, right? We talked about the accounting equation assets equals liabilities plus equity. That accounting equation must always be in balance. We also talked about the individual transactions and that each transaction has two accounts, a debit account and a credit account, and that the debits must always equal the credits. We make sure that our debits equal our credits at all times, and we do this for all of our accounts. So here we see cash, sales discounts, cost of goods sold on the debit column. The reason why it's a debit column is because those three accounts normally hold a debit balance. And on the right side, we see accounts receivable, sales, other accounts, inventory. We see that they equal out, right? Think of this as a way for us to verify that our debits equal our credits. That's why that was the point I wanted to get across. This next area represents all of the purchases that our company made to purchase inventory. Okay, we call this a general purchases journal. It shows us all of the purchases of inventory from our various suppliers that we've made for the month. We call this a purchases journal. It's all the individual transactions listed out. Here you see the account name, the date of the invoice, the terms, if there are any, the amount, the inventory amount, etc. It's a nice list of all those transactions. We can see how all of those purchases that we've made is connected to our accounts payable ledger. I haven't paid those bills yet. Okay, so therefore it's an accounts payable. I made all these purchases of inventory, put it into my inventory, and it's also in my accounts payable because I haven't paid them yet. But you see how it works, right? We can also see how the total amounts roll up to our general ledger. So again, purchases journal, think of it as a subsidiary account. It represents our inventory. General ledger, that's the list of all of our accounts and it shows all the totals. Right? This kind of shows you that connection. Just like before, we need to make sure that our balances are accurate. And we prove the ledger by listing out all of our individual suppliers and the amounts that we owe each one. The amounts that we owe each one should equal the total accounts payable. If it doesn't, there might be a problem. So we always make sure that the total amount equals the individual accounts total. Yeah. When we make payments using cash, we have what's called a cash payments journal. Works the same way. It shows all the cash outflows, and it shows us. You can see the connection between the cash payments journal and the accounts payable ledgers. Right? It shows the balance is going down because we're paying them out. And we see how the total amount rolls up to the general ledger. Again, cash is a subsidiary account of the general ledger. And within cash, we have cash inflow, which are cash receipts, and cash payments, the outflow. Cash inflow is related to accounts receivable. Cash outflow is related to accounts payable. At the end of each month, I go through a process called making general journal transactions. These are the special journal entries that I make. Includes things like the purchase or sale of property, plant, and equipment, the use of notes or bank loans, receipt of a notes receivable, which is a loan that the business gave to a customer, purchase and return allowances, just kind of like the odd stuff. Make special journal entries for those things. As I had showed you earlier, I showed you my QuickBooks account. It's an off-the-shelf software. Anyone can purchase it. Sage 50 is another one. Mint, Oracle, etc. There's a lot of different accounting softwares out there, a lot. And I strongly encourage you to familiarize yourself with them. Feel free to download the free trial and explore with it. The nice thing is, in today's modern era, the technology really helps us. It removes those manual processes that take up a lot of time. A lot of things are automated now. And the software is usually integrated with other components. For example, back in my early retail days, we used to use QuickBooks for tracking our accounting for a small retailer. And every time that the barcode reader would scan the barcode when the customer was making a purchase, it automatically took it out of inventory. And when the sale was complete, it automatically recognized an increase in cash and a decrease in the inventory, and it automatically recognized an increase in cost of goods sold. So it's automatic. It's integrated. That's one of the great things about the way technology is heading now, is that it really removes errors from happening from human, and it helps to automate a lot of the transactions that we used to have to enter by hand. With QuickBooks and other softwares, because a lot of that information is stored to the cloud, the information is processed immediately, right? There's no wait. I want you to think about something. Have you ever purchased gasoline at a gas station using your debit card or a credit card? Or have you ever gone out to eat somewhere and used your card, debit or credit? Or did you go to a store, make a purchase using your debit or credit card? Of course you have. Almost everyone has. Now, sometimes you'll notice it doesn't hit your account right away. It'll be processing. You know what I mean? You look at your bank app or your statement or whatever, and it says it's processing. You're thinking to yourself, well, why is it still processing? I ate there 4 days ago. It says it's still processing. Or I purchased gas 2 days ago, and it says it's still processing. Why is that? The reason why that happens is because the clerk who closes the batches didn't close them yet. Every time that your credit card or debit card gets swiped on one of the machines, in order for it to be closed out, there has to be a closing process. And that happens either daily, weekly, or sometimes monthly. So with the machine, when they swipe your card, at the end of the night, they have to, what we call, close the batch. They have to process all of the transactions that happen during the day. That's what closes out the transactions, and that's why sometimes it takes a few days for it to post to your bank account. Next time you see that, that's why that happened. Called batch processing. Since I do accounting work for my clients, they give me access to their database. They send me the file. I put the file into my program. Everything's done online, right? It's done through a computer network. Yeah, very straightforward. Computer networks are linked computers or giving users access to common databases and programs. Very straightforward. It's a fancy way of saying that you can get access to your customers' information using a computer. Very easy. We use a lot of software to help us to manage business. Yeah. Large businesses use what's called Enterprise Resource Planning Software, ERP. ERP simply means that we use programs to manage our operations. Enterprise Resource Planning Software. It's software to help us to manage our operations. It tracks all of our inventory. It tracks all of our payroll. It tracks all of our transactions. It tracks all of our employee information. It tracks all of our customer information and more. It does everything, pretty much. That's what we call Enterprise Resource Planning Software, ERP. My favorite example is Oracle. Only 12% of businesses use it, but it represents a large portion of business. Companies like Under Armour use Oracle to manage their business. Information, as you know, is stored to the cloud. You can access the information from anywhere using any device. Laptop, cell phone, computer, tablet, pretty much anything, right? Possibilities are endless. We no longer store things on a local hard drive. Those things are stored to the cloud. Call that cloud computing. I promised you I wouldn't let you leave today without doing at least one ratio. So here it is. This is called the days payable outstanding. This tells me how long it takes for our business to pay our bills on average. Yep. How long it takes our business to pay our bills. Days payable outstanding. How long it takes us to pay our bills on average. We take accounts payable total amount divided by cost of goods sold for the year times 365 days. This gives us the number of days it takes us to pay our bills. It's a really great ratio to know. I like that one a lot. And that, my friends, is the end of our discussion today on accounting information systems. Are there any outstanding comments, questions, concerns about what we talked about today?
No, I just appreciate what you do. I've learned. I haven't learned as much as I would like to, but I've learned enough to be able to brag about it.
Well, that's cool, Damon. I like that. You know, that's a real good thing, Damon. Yeah, absolutely. I love it. Yeah, you know, that's the thing. You want to be good enough to be dangerous with it. Very cool. Okay, so let's just quickly recap. We talked about today accounting information systems, and yes, this is a good thing. It'll automatically sign me out. I like that. And for Thursday, if you wouldn't mind, please taking the Chapter 7 quiz. That would be awesome. Do that during the class I'm on Thursday, like normal. Yeah. Next week, on Tuesday, we'll cover Chapter 8. It's relatively short, I promise. You'll have a Chapter 8 discussion board, which I'd like you to do next Thursday. You're more than welcome to do it early if you'd like to. And then at the end of next week, the midterm exam. You know, you're more than welcome to start it now. You can take a look at it, familiarize yourself with the exam, and it goes in order, chapters 1 through 8. Yeah. But you'll be okay. Don't worry. And we'll talk more about it next week.
Excuse me, Professor.
Naya, please.
Would it be multiple choice or?
Yep, it's a mix of multiple choice and true-false questions.
Okay, great. Do you know how many questions would it range from?
I think it's about 20 or 25 questions. I'm trying to remember, but it's about 20 or 25 questions. It covers chapters 1 through 8, and I believe they're spread evenly. So it's probably about 4 questions per chapter, thereabouts.
Okay, that's great. That's about the last number I ever had on the midterm, questions wise.
Yeah, no worries. Yeah, I got you.
Thank you again.
You're very welcome. Are there any other comments, questions, or concerns about anything? Oh, thank you, Jermaine. Very nice of you. Okay, great. Well, thank you all so very much for your time today. Oh, thank you, Tony. I appreciate those comments. Thank you. Yeah, anything you need, I'm here for you all the time, as always. You can email me, call me, set up office hours, whatever you like. I'm here for you, I'm here for your success. And with that, I want you to stay safe, wash your hands, do the right things, and I'll see you all again next time. Thank you so much for your time today. Appreciate you. Take care.
Thank you, Professor.
Bye.
Thank you.
Thank you.
Bye, Professor.
Take care now. Appreciate you.